Hello and welcome. You're tuned into a fresh new edition of MF Corner. I'm Sonal Bhutra. With me, as always, is Pavitra Parekh. Hey Pavitra, good afternoon. And we talk about SIP investments, every mutual fund investor doing that. But today we are going to be speaking about how they can increase their returns via appropriate allocation, appropriate timing as well. A recent study titled Journey of an SIP Investor shed light on several aspects of SIP investing and how can one achieve higher returns on higher holding periods. To discuss this study, we do have a guest with us. Patra, we have Juzer Gabajiwala, who's the director at Ventura Securities, joining us today. So let's go ahead with that.
Okay, let's welcome our guests on the show. First of all, Juzer, thank you very much for joining us and, for taking out the time for this show. Like Sonal was pointing out, you have put this study out on SIP investing. There are some very, interesting takeaways. So first, take us through why you decided to undertake this study and what is the big highlight that you really got after you did go through this entire study?
So, first of all, thank you for having me on your show. And the whole purpose of doing this exercise is that I'm sure that you would have noticed that there's been a lot of data which has been floating around where in fact actual statistics because it is AMFI certified data where we are seeing that a lot of SIPs are getting stopped. So what we have seen is that nearly 60 to 62% of SIPs are stopping only within the first 1 year of investors starting the SIP. And a surprising fact is that in fact even SIPs which are more than 5 years in terms of continuation, only 11% of the investors are continuing that journey. So this is something what actually prompted us to decide that why we need to do this study, and we realized that what is the investor's expectation? So one thing what we see generally is that investors, when we talk to investors, we tell them that you should expect a 12% or a 13%, whatever return per annum, and they assume that this returns is quite linear, but that doesn't happen linear, right? It happens in a volatile market. It'll be up and down. So expecting a linear return and again being very clear and being focused on what their goal is something which has been missing from most of the investors, and that is what prompted us to do this study.
Okay. So when you did speak about key takeaways from the report, you spoke about how investors get out of their SIP investments sooner than what is expected. But generally, if you can highlight something else that would have stood out, something that is very important for everyone who is making regular SIP investments, and they should be aware of that.
So one, what majority of the investors don't realize is that we start an SIP with a period of 5 to 10 year time horizon. But even when you're doing a 10-year SIP, your actual investment period is only 5 years. So when somebody is stopping his SIP, let us say in 1 year, his average investment holding period was just 6 months. So trying to expect returns from a whole basket of mutual fund portfolio to perform within such a short time span is just not going to be possible. So that's the reason why what we did is that if supposing somebody had done an SIP in the year 2022, it was a very flattish year after a very buoyant 21 and 20 what we had, right? So when you just work backward, if you actually hold your SIP for 3 years, that is the time when it actually starts making some returns. So the longer the duration, then your minimum return also increases in an SIP. So one is that having a minimum holding period should, according to me, should be at least 5 to 10 years. And you really want to enjoy the benefit of an SIP, your SIP should continue for 20 years. So that is the most important factor which I would want to highlight to investors. The other thing is that we have seen even how, in fact, we have just taken the very broad indices. So one is like if you look at a large cap index or a mid cap and small cap, what we have seen is that in the last 20 years, the Nifty has been negative maybe around 3 to 4 times, and it is the rest of the times it is positive. So 10% of the time you can have a negative return out of 100%. For a mid cap, it is around 20 to 25% of the times where you could have a negative return, and small cap is somewhere around 30 to 33%. So the small cap will be more volatile, the mid cap slightly less volatile, and a large cap will be the least volatile. And one more observation what we did is that we all know about 2008 where we had markets where we had a complete meltdown, and globally the markets was down. So where there was a nearly in large cap, if somebody was doing an SIP for the full calendar year, he would have had a minus 48% return. Now, if he had just continued his SIP for one more year, his entire return for over the 2-year time period would have been 42%, wiping away that entire loss of 48%. So the second thing is going to be, having patience. Yeah. So doing an SIP requires a lot of patience. So I think these are the two key factors one needs to keep in mind. And frankly, if anybody is looking at doing an SIP for less than 3 years, in my opinion, he should not even start that journey.
Yeah. Okay, so like you said, it does require patience, and sometimes the market really tests you as well, right? When, for example, if the market is bad or if it's just stagnant, it can really sort of make you question your decision, and that's when you see a lot of people getting out. But, in the table and in your study, we were going through it, you have spoken about different categories of schemes. That's large cap, mid cap, small caps. How did you pick these schemes? Is there, is there only these schemes that you studied? Have you looked at some other categories as well? Just take us through that first, and then I'll come to what the, highlights have been in terms of studying these different categories.
So actually, if you see, the markets are broadly categorized into, large, mid, and small cap, right? Other categories which you have are going to be, multi-cap. You will have flexi cap, but they will all have large cap, mid cap, and small cap. Then you will have sectoral funds. So you can keep on having, which will be, being more thematic, and a multi-cap fund is a mixture of, how the fund manager is going to allocate money between a small, large, and a mid cap. So the reason of keeping it to these three broad categories was that these actually cover the entire breadth of the market. So that was one of the reason of, restrict ourselves to these three main categories.
No, when we talk about the categories, of course, we understand they basically cover everything that we can in the markets. But when you talk about 24 schemes in large caps, 18 schemes in the mid cap space, were they picked randomly? Because we do have a lot of options available.
No, so what in fact, we have been very agnostic about it when we have made this study. So the reason why we see this number of schemes is because that was the number of schemes which are existing for around 10 years. So we have taken all these schemes which are there from 2013 to 2022. So that was the reason of that. There were 24 large cap schemes, there were 18 mid cap, and 10 small cap.
Okay, we get that.
It is only after that the numbers have started going up.
Understood. That makes an absolute sense. So tell us more, Mr. Gabajiwala, what are the other factors that are leading to higher returns on higher holding period? One is that we talk about the power of compounding. What are the other factors that work when investor holds an SIP for more than 3 years?
So actually, you don't need to do anything more, right? I mean, see, it's like, when you take, there are two roads which are available to the investor. One is that he can, do direct equity, right? And so that is going to be a very, very bumpy road. Whereas, I call that SIP journey is more like a, expressway. It will be a smoother, longer journey. But if you do it patiently, and if you are doing it for a long run, this is a sure short way of, accumulating wealth. And, everybody talks of, compounding and power of compounding. Compounding takes place in each and every instrument, whether you take a bank FD or whether even a look at even LIC, life insurance products, right? But the power of compounding is truly felt only in the equity market, because that is the only place which can give you a very substantial alpha over inflation. And that is what I believe investors should look at, that making a real return much more than what is the inflation. And if they're able to do that, and if they are able to have the patience, you don't need to do anything more than that.
Okay, we get that point completely. But Mr. Gabajiwala, we have lots of more questions on this as well, on the study that you've conducted. But before that, we do have to take a short break. So stay with us, because we're going to continue this conversation in just a bit.
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
This car's electric for more reasons than just being woke.
Oh yeah.
And man, the money it saves you is no joke. It's got enough range to get you anywhere!
And it's the go-to park when you get there.
The all-new MG Comet EV, the no-nonsense car.
Because just like us, this car cuts the crap, man.
तू है तो मुझे फिर और क्या चाहिए, तू है तो मुझे फिर और क्या चाहिए।
25 मई से शुरू हो रहा है खेलों का महाकुंभ। देश का युवा फिर उतरेगा खेल के मैदान में। जहां दौड़ेगा लहू अपनी जीत के सम्मान में। उत्तर प्रदेश की विकास गाथा में नया अध्याय। हर दिल में देश। खेलो इंडिया यूनिवर्सिटी गेम्स, गर्व से गौरव।
सीधे सीधे, अरे नमस्ते, सीधे 99 एकर्स पे है फ्री प्रॉपर्टी लिस्टिंग। घर कल ही लिस्ट किया था और आज लाइन लग गई। 99 एकर्स पे प्रॉपर्टी आएगी, लेने वालों की लाइन लग जाएगी। घर लेना हो या बेचना, 99 एकर्स से ही पूछना।
Welcome back. You're still tuned into MF Corner here on CNBC-TV18, and we still have Juzer Gabajiwala with us to talk about the SIP style of investing and this very interesting study that they have conducted. So, you know, we were talking about this entire categorization as well, but you did mention that investors have made larger money when the markets fell sharply, right? So, and we will have the table up on your screen as well. So, take us through what you really mean over here. Are you saying that in times of extreme downtake, when it is really important, you know, when it's perhaps harder to continue with your SIP, that is when you should really sort of keep the faith and stay?
Yeah, so actually, see, the best time to accumulate units are when the market's going down, right? We keep on talking about the philosophy that, you know, you should buy when something is cheap and sell when it is expensive. So, you know, when markets go down, that is the time when you are supposed to be buying and not at the top. So what you are doing in SIP is exactly the same, because your amount is remaining constant. And when the markets are falling, you are actually accumulating more and more units. And the one fine day when the market goes up, you recover all the losses in a jiffy. So I think in SIP, that is the best way to practice, you know, because you are buying a whole basket and you cannot go wrong in a basket buying. It's like, you know, when people always buy Nifty when it falls down and then they gain, because that's the whole basket which is going down.
No, and the recent best example for that one would be March 23rd, 2020, when we saw those down circuits on the markets, and after that, that stellar rally that came by later.
Absolutely.
So, of course, if somebody had bought at that time, would have made a fortune, of course, for the next 2 years. But we do take your point. It's usually the buy and dip strategy that works in certain markets, and that's when it would have worked in the previous years as well. So, are we saying it is better to do SIP investing versus lump sum? Is there a way to choose between the two? And at a particular time frame, say, what would you advise the viewers or investors to choose? Should it be SIP for a longer time, for more than 3 years, or lump sum also would work for them into mutual funds?
See, what happens is in a mutual fund is like, supposing if I tell you that, you invest, 50 lakhs today, right? You will be very, very skeptical because you don't have a clarity and you don't want to put that amount of money at one go. But if I tell you that, you start investing now, because first of all, you may not even have that 50 lakhs. So the important thing is that, the same way as you are earning regularly and you're spending regularly, then you need to have a habit of not only saving, but investing also regularly. So this brings a lot of discipline into your cash flow management and a disciplined investment. So in SIP, you cannot go wrong. But if you had a lump sum amount of money and if you're very confident that, over the this money is not required for the 10 years, then obviously you will make more money over there. But because that much amount of money is not available to the investors and they also want to build wealth over a period of time, this is a best strategy for, in fact, most of the investors.
Yeah, no, that makes complete sense. And a lot of people who watch us are also perhaps younger people who are starting off in their career. So they might not have that large corpus right at the beginning to be able to invest that. I want to get back to some of the categories that you were mentioning earlier. For example, the small caps, the mid caps, because, especially at times like this, people are looking at the broader market to be able to generate that alpha, right? When you feel like maybe on the index level, too much might not happen. So do you think that this is a good time to be exploring those schemes, the small cap, mid cap schemes?
Yeah, absolutely, because alpha can be made only in small caps and mid caps now. In large cap, the scope is now become very, very limited because the fund houses have only 100 schemes to which they can invest. So you can look at mid cap because those are potentials to become given a large cap down the line, and even the small caps have a potential to become a mid cap. And a good way of doing through the mutual fund route is that it is very difficult for us to pick up a good small cap fund and we may a stock, and we may land up with a wrong stock. So here at least they are more expert oriented and they have a much more better experience and they track the markets day in and day out. So it is better to try to do in a small cap fund. But for a small cap fund, you need to have a slightly longish time horizon because the average holding period should be at least 5 years. Means you should be doing an SIP for at least 10 years in a small cap.
Yes.
Then you really, enjoy the benefit of the returns which you are getting out there.
We totally take your point, and you explained that idea of holding period very well, that you would assume you're holding it for 10 years, but it's actually half that time because the last bit of your SIP is only invested for a limited period of time. If it's December 2022, it's only invested for those 31 days and not the entire time frame. So we do take that point. Last question before we let you go, Mr. Gabajiwala, and that is on the general market outlook, so to say. We are talking about sectoral funds, we are talking about thematic funds. Is that a theme that works for new investors? Is that something where they can get in? Because that's not a place where they can invest for a longer period of time, right?
No, I would not advise a new investor to go into a thematic fund. Thematic and a sectoral fund is actually for a more seasoned investor. Once he has done that, for the first time investor, he can actually, in fact, once he has a longer time horizon, he can start with a mid cap fund. If he wants to be conservative, he can actually go for a large cap fund also. So it is not that you should rule away a large cap fund, but a large cap fund will give you more or less market returns. So it will be more stable, it will be less volatile. Mid cap will be slightly more volatile than large cap. But if you have time in your favor, means if you have a longer the time horizon, lesser is the volatility. So volatility gets reduced over a period of time.
Okay, that makes complete sense, and thank you very much for taking us through, that complete explainer on this SIP route of investing, how you should go about it, and the kind of benefit that it can, really lend if you do it consistently and keep the faith through all of these market cycles.
And important to know about the holding period, right? It's just not for a smaller period. It makes sense if it's longer. And that's exactly what your study talks about as well, Mr. Gabajiwala. It was a pleasure speaking with you. Thank you so much for joining us today. And with that, it's a wrap on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.